Okay, recording this video Sunday 16th of November 2014. Hope your trading is going well. So mid this week I put out a video saying that I'd do something this weekend talking about the US dollar, the Forex pairs, gold and silver, because we had an important inflection point lining up in a whole bunch of those charts. And what do you know, on Friday we had an incredibly strong day on gold and silver, so it's very timely to do it this weekend. Now, I'm going to roll through my charts, but before I do that, just to say a little bit of a caveat, I'm not suggesting that we're going to get a change in trend from downtrends in these markets to uptrends. All I'm saying is we have reached a point where we've got to an extreme from which we're going to have a little bit of a bounce. Before we start moving into any kind of uptrend move in gold and silver or euro, yen and so on, we'd have to be breaking resistance levels in order to show that strength. What I'm going to be showing you on all of these charts is that we've reached these kind of end of trend signals on the way down, and so that just points to some support, this kind of left shoulder to be made, and we're going to have to go through basing activity and prove ourselves on the way up before having a change in trend. All we're seeing is a pause on the way down from which we're going to have a little bit, I think, of a reaction rally for these markets. So that being said, let's get into some of these charts. So gold and on the daily and the weekly chart here, and this is the setup that I'm using for these kind of global macro markets for these videos, where I can look at the daily and the weekly charts side by side so you can see kind of the micro picture and more of the macro picture, using the exhaustion patterns particularly on the weekly charts for changes in trend. And then beside that we've got the commitment of traders charts. Remember, the commitment of traders numbers comes out weekly, so we can't do a daily chart there, but we can look at a weekly chart versus a monthly chart and look at the commitment of traders numbers that I flip upside down and look for divergence patterns in those. So the message out of the gold chart is that we've got this pullback to end of trend sequence gone on here, and we've found a support level on the weekly chart. On the weekly chart we've got these exhaustion patterns on selling down, so we've found some kind of left shoulder that we're going to be making here. We've also got blue professional bars kind of coming in, and we've got a bit of a U-turn happening here in the blue professional bars, where you can see professionals picking up on the way down, a little bit of a smaller range bar last week, and then this week, you know, kind of picking it up and kind of anxiously buying it. So that's a bit of a U-turn here. You can see that, a U-turn down there on that end of trend pattern here. If you look at the bigger picture on gold, you can see that, you know, gold kind of topped out with an exhaustion pattern. I think it was a pullback. Well, the pullback level got broken, then we tested back up. There's eventually we get the bearish divergence come in on the weekly chart. It was like a year later. Bearish divergence finally comes in here at 1800, and then we fall into this really strong downtrend. Now the downtrend down here, we've got exhaustion on a left shoulder happening here, but that was a long time away. So, you know, the bullish divergence came in, pullback to end of trend, and Rambo patterns down here, this important kind of 1200 level. I was kind of at the beginning of the year I said, you know, is 2014 going to be the year for gold and silver? Is that the year where we kind of actually form a base and kind of have a reaction rally back up? But you can see early on in the year, back in March, the blue professional bars, and that's almost like a U-turn here, the professional bars came in at the highs and we sold this down. You can see on the daily charts that was an exhaustion pattern and pullback to end of trend and so on. So that was an important point up here at 1400 where they kind of came back in and sold it down. Now, so blue professional bars, down bars, the last time we had these was mid 2013. Now, you know, kind of late 2014, we've got blue professional down bars coming in again. So this is really important as a potential kind of turning point or resting point for gold. We'll need to do a little bit of cyclical activity before lining up ready for a break into an uptrend. But this is just showing that we've found some kind of extreme point from which we'll have some basing activities. Maybe a short covering rally, who knows? See, it depends how strong, you know, the move kind of back up is going to be, but it's just a point where we've kind of reached an extreme on the downside. This one was quite nice. I always say, if you've got a bullish divergence or a bearish divergence pattern right by the zero line like this one, wait for the flush pattern, and there's the flush pattern that came in on the end of trend signal there. So that's interesting. Now, with all of these charts, the commitment of traders has not really started to support a lot of these changes in trends. I think we're going to have to wait several weeks and months before we get those kind of bullish divergence patterns kind of lining up in these markets, but you'll see a consistent theme in each of these commitment of trader charts that none of those bullish divergence patterns have come in. We had really nice bearish divergence kind of patterns kind of showing us where the market was kind of falling off, but commitment of traders, if you look at what's happened over the last couple of weeks, not yet supporting this. I'd expect the commitment of traders to start really ramping up a little bit and showing divergence patterns before we had kind of real change in trend potentially kind of lining up. Silver, same kind of chart, pullback to end of trend with an exhaustion pattern happening here. Blue professional down bars. I mean, we've got to $15 for heaven's sake. It's a long way down. On the weekly charts here, let me just show you that. So again, this was the extreme move up to $50, just under $50 in silver, pullback to end of trend after an exhaustion pattern, and then on the way down, again, this thing took a long time to kind of base down here, pullback to end of trend. But the last blue professional bars that we saw were up bars, and then they got broken on the downside. So after a Rambo pattern kind of down here, testing those lows at the end of last year, now we got a blue professional down bar where we're breaking the highs of that. So that's showing professionals kind of picking it up at the lows to kind of down here. So again, we've overshot the support level on the weekly chart. That doesn't worry me kind of too much. We got pullback to end of trend. It was a kind of an extreme move in the last several months, kind of down here to $15. So from 22, 21, kind of up here. Anyway, again, it's a left shoulder trying to be made here, from which we'll have some little kind of consolidation rally back up, but not necessarily change in trend yet. Not time to buy in, but time to exit shorts. And again, commitment of traders a little bit more positive here. Whoops, on this last week's kind of data popping up there. But not super strong at the moment yet. So the reason why we talk about gold and silver along with all of the Forex pairs is because they're part of one big complex. I mean, they're all moving against the US dollar. At different rates and speeds, the betas are different between those different markets, but effectively they become one kind of big complex. And then you could add in the commodities complex as well and say, well, that's kind of trading anti-US dollar. It's this thing that we're coming down to just one or two kind of markets. It's the US dollar and the equities market. They're absolutely key, and everything else is kind of moving against those things. Anyway, so that's the picture on gold and silver. Let me show you what's going on the euro. So the euro, same thing this week. We had pullback to end of trend go off here. Nice little pattern, exhaustion patterns on left shoulders. Then we had a flush here right after a divergence pattern right on the zero line, and then we've made pullback to end of trend with another flushing out kind of pattern here, flushing out the shorts. No blue professional bars kind of coming in on the way down here. They were kind of active on the way up here, but it's the after an exhaustion point here. We don't have bullish divergence kind of coming in, but it's a point, it's a left shoulder that we're potentially making here, from which we'll kind of rally back and so on. And this is where I talk about these pullback to end of trend signals rippling through the lower, medium and higher time frames. So it's gone off now on the daily chart, a low time frame. The next time frame up is a weekly time frame, and you can see we broke into a downtrend move below this cyclical support that we've had for the last year, this strong downtrend break in the euro. That's a left shoulder from which we'll bounce back to form a pullback in a downtrend level, and then test back down for the head of that head and shoulders move with an end of trend on the weekly chart. So look for this. There's a rippling through, a pullback to end of trend between the different time frames, and it works on all different time frames. Down from 500 bars, 500 tip bar charts to 1500 and 4500. Then just ramp it up. Each of these different kind of chart time frames, whatever you're trading, you'll see this pattern kind of coming through. And then you can see the euro activity on Friday was pretty strong, kind of down there. So 124 is an important level from which we might have a bounce from here. And again, the same type of reaction on the commitment of traders, yet to show real strength. You can see here on the weekly chart on the euro, we've not gone anywhere in terms of commitment of traders, and we certainly don't have any like bullish divergence patterns here kind of lining up. So before we have a really kind of strong move in the other direction, we'll need to see some kind of commitment of traders, bullish divergence like that. I mean, they're quite nice little signals when you look at these, but we're yet to see those happen on these charts. But that's not to say that we couldn't have a little bit of a reaction back from this 124 level on the euro. So the next one is the Japanese yen. Of course, Kuroda, with the central banker in Japan, kind of just destroyed this market back in Halloween. I think that was, this was the day where it just dropped through 91 92 kind of here, and we're just back into the 80s. Just unbelievable here. So remember, this is the CME contract for the Japanese yen. So a lot of people are used to seeing this in hundreds and so on. I like the way the CME does this. So this is kind of 86 cents effectively against the Japanese yen. But you'll see charts that are kind of flip the other way and in hundreds, and I find that more difficult to kind of deal with. But anyway, here we go down here, another pullback to end of trend this week in the exhaustion pattern. Now this exhaustion pattern is happening on an end of trend here, and it was extreme, so we're going to have to go through some basing activity. I say when you see exhaustion with an end of trend, wait for the second cyclical turn after end of trend. So we got to see support, resistance, and another support level in, and then to see if we get a bullish divergence pattern after that before we see any kind of strength. So we could have a little bit of a bounce, because the yen is going to move somewhat with euro, pound, and so on, the other currencies, not quite as strongly because it's the weakest of the lot, but we'll find some basing activity kind of in this area where we put in some cyclical turns. And again, it's extreme in terms of exhaustion. We've not had another exhaustion sell pattern going on here, but this will generate one when that kind of goes off there. So it's the weakest of the lot, but it's still showing some areas where we could find a level from which we could have a little bit of a pause in this downtrend. And again, Japanese yen, in terms of this is commitment of traders kind of supporting this down move, and a little bit maybe here, but we haven't had a bullish divergence pattern kind of go off yet, so I'll be waiting for that before suggesting that the yen's going to get interesting on the upside. But finding a level of support here is kind of definitely on the cards over the next weeks and months. So British pound's actually been the weakest after being in this big rally where it was the strongest of all of the kind of Forex pairs, certainly stronger than the euro against the US dollar. Then it kind of reached this extreme level up here, flush pattern, broke through support, bang, and into this really strong kind of downtrend move here. And on the British pound, it's like we've gone through this last support after going through a pullback to end of trend kind of pattern with seemingly an exhaustion pattern and a flush pattern. I mean, that looked okay. There weren't many blue professional bars kind of picking it up at the lows, and so this has gone pretty weak. We're still below support here on a weekly time frame and so on. But if all of the other currencies start to find some strength, the pound will kind of join in a little bit. But again, it is weaker than the euro chart at the moment. British pound on commitment of traders, again still heading down on the weekly chart here. We're not starting to strengthen there yet for any kind of bullish divergence patterns and so on. Again, just look for these on these kind of big time frames. They can be really interesting signals. Aussie dollar is actually pretty strong. So the Aussie and the Canadian at the moment are doing quite well. So we had, I don't know if anybody remembers, but the move through parity here at the Aussie dollar was really interesting, kind of back in 2013. I had a good series of videos there talking about the likelihood that the Aussie dollar was going to collapse, and collapse it did. But we've reached kind of 85 cents on the downside is an area of support. This exhaustion pattern was back then, but the amount of selling that went into this pattern here was almost as strong as that exhaustion pattern. Then we kind of go through some wide moves. Wasn't pulled back to end of trend on the weekly chart here, but blue professional down bars with exhaustion here, and we bounce back above this 85 level here, so that's important. And on the daily chart you can see it's put in pullback to end of trend. There's a nice little left shoulder with exhaustion patterns, bullish divergence kind of come in. We come down to another exhaustion pattern on end of trend with a blue professional bar and bounce straight back off there. So this is an important level. 85 is an important level. We're going to find support. Probably go through a couple of cyclical turns on the daily chart as we kind of figure out what we're going to do from there. But again, showing an area of support in all of these kind of currency markets against the US dollar. Commitment of traders, though, not much there in terms of bullish divergence happening, so not supporting a change in trend yet at all. So just bear that in mind. Canadian dollar, Canadian and the Aussie often look kind of similar. This is pullback to dirty end of trend. We've got exhaustion, blue professional bars, flush patterns kind of going on here. We've got an exhaustion pattern here. Wasn't a nice kind of pullback to end of trend signal on the way down. I look at all of these Forex pairs against the US dollar, and so they start to move together. When you start to see all of the charts kind of lining up with similar support levels kind of coming in, then they become interesting. And again, weekly support, daily support, exhaustion patterns, blue professional down bars and so on. So there's something going to hold us on the Canadian dollar for a little bit. What have I got after that? Commitment of traders, Canadian dollar, again, no bullish divergence patterns kind of come in here. Not a lot of strength on the commitment of traders kind of yet. Okay, so, and then, you know, the reverse of all of these, so the reverse of the USD, of gold, silver, you know, the yen, euro, and so on, is the USD dollar index chart here. And what we'd expect to see is a high being made, a left shoulder being made on the way up on dollar index, and you can see here blue professional up bars happening here with exhaustion buy, pro signal exits, and so on. This is a left shoulder potentially lining up here on the daily chart. It's a nice pullback to end of trend. We've got exhaustion going on here at these highs, so we've got to go through pullback after the pullback to end of trend, a couple of cyclical turns in order to test that kind of high up here. But that's looking interesting for finding some kind of resistance on the way up for the dollar index. And likewise on the commitment of traders charts, as yet we've yet to see this kind of really weaken and bearish divergence patterns be made on the commitment of traders. So with all of those charts, it's not, the Forex charts particularly, it's not a change in trend happening, it's just a pause in the current trend. So a pause in the uptrend on the dollar index and a pause in the downtrend on the euro, potentially the yen, and potentially the pound, Aussie dollar, Canadian dollar, and so on. So that's what's kind of lining up in each of those charts. Now, what does that mean for equities and the E-mini and so on? You know, I don't know. I mean, the move that we've had over the last year or so has been just into the US dollar. This entire strength that we've had since the beginning of the year in 2014 has been into dollar index. Here, this entire move during 2014 has just shown the strength of the investment into the US markets, because it's kind of the cleanest shirt in the laundry hamper, because Europe is certainly a basket case. Japan, my God, is a basket case. We've not got a lot happening in China and the commodity markets, Canada and Australia, because we don't have world growth at the moment. But the top 500 companies in the US have been reducing the float of their shares, and therefore the stock market's been going up. It's been kind of positive. We've got the rates in the US, at least, I mean, they're low, but by international standards they're relatively above the rates in other markets, particularly the European markets. So the money has been flowing into the US denominated assets, into the bond market and the equity market, to some extent the real estate market in the major cities and so on, and that's what's been driving this trend. So we could have just a little bit of a pause for a while. If we get a little bit of a pause, we could have a little bit of weakness in those markets, a little bit of weakness in the equities market. Maybe some of the equity market money moves out into the bond market kind of temporarily and so on. So it's kind of wait and see. Calling some kind of weakness in the equities market has not been a sensible thing to do over the last however many years, because it just continues to rocket up and up. But we've got interesting things happening in all of these kind of turning points, with all these pullback to end of trends kind of going off on daily charts. As we ripple through each of these charts, you can see this is happening with exhaustion, left shoulders kind of happening here. So something's afoot. Let's wait and see how this kind of plays out. And I'm not saying changes in trend, I'm just saying pauses in current trends. So hope your trading's going well, and looking forward to next week.